So we are taking a look at Tesla stock today, and there is a ton of great topics that I want to go ahead and share with you guys. Of course, we have to address the elephant in the room, which is the Tesla vehicle production and delivery numbers that came out for the third quarter of 2023. By now, you guys should be aware of this, but let's go ahead and talk about it. So we saw the delivery numbers come out at 435,059 vehicles delivered for the third quarter. And of course, the markets reacted very negative to this when this news first came out. In fact, if we look at the 5-minute chart, we saw that there was heavy amounts of selling pressure taking place. However, as the market opened, we saw Tesla stock actually rebound for the day, and we saw Tesla stock actually close up slightly higher than the previous trading session prior. Now, this is actually not surprising because one of the things we have to understand is that, yeah, Wall Street had an expectation at around 456,000 vehicles being delivered for Q3, but it wasn't too far off. And so this reaction was an overreaction, and we saw that many Tesla bulls are really not concerned with Tesla missing by a small amount. In fact, there are a lot of other great things to be proud of or excited for if you are a Tesla long-term investor. Of course, we're going to go ahead and talk about this video further on about Tesla more details, looking at it from a technical perspective and also looking at it from a short-term time horizon and also a longer-term horizon as an investor. But I also wanted to share something that I shared with the Push and Profit private group this morning, which is this, right? So although when you look at Tesla through a stretch of time, today we had bad or miss in delivery numbers, but from a longer time frame, I mean, look at Q3 vehicle deliveries over time. Looking at 2012 with 320 all the way down to 2023 at 435, which is a compound annual growth rate of 92.6%, which is very good in my book. But I also want to share this tweet from Gary Black that he pinned just a couple of hours ago, just highlighting the catalyst for Tesla going into the near future. So number one being the M3 Highland launch for Q4, which is coming out. Then of course Cybertruck deliveries launching in Q4, FSD OEM licensing deal in fourth quarter. Then we also have stable auto gross margins. I mean, we have a whole list over here. 7,500 EV instant rebates for 2024. The feds are going to pivot in interest rates going into 2024. Of course, this is a huge one. Tesla's $10 billion share buyback. Now, this was mentioned in a earnings report back in 2022 towards the end, where Elon Musk mentioned that Tesla is intending to do a share buyback of around $10 billion. So this is still something that we're going to want to keep our eyes out for looking into the future. But of course, we also have FSD Alpha V12 Level 4 release coming out, and then also the 25,000 to 30,000 compact vehicle coming out. And he has his price target at around $320 for the next 6 to 12 months. Now, again, a long list of catalysts that are going to most likely provide a little positive uptrend for Tesla's stock. Now, looking into an update on monetary policy, today we got some interesting words from Federal Reserve Governor Michael Barr, where he said, in quote, "In my view, the most important question at this point is not whether an additional rate increase is needed this year or not, but rather how long we will need to hold rates at a sufficiently restricted level to achieve our goals." Now, this is in sync with what I've been saying on this channel for a while now, where the real question isn't about whether the Fed is going to hike one more time before the year ends, but really about how long are they going to hold rates at these restrictive levels. Because at the end of the day, it still takes time for the economy to feel the impacts and changes in monetary policy. And in fact, right now, the economy has still yet to feel the impacts of previous rate hikes, which is why the Federal Reserve has recently been pausing on the decision to hike. It'd be too premature to hike, because we're still feeling the impacts, or we still haven't felt the impacts of previous hikes. And so right now, that's the real question. And so one of the things that we have to understand is that recently in the summary of economic projections, yes, we did get some confirmation that the Federal Reserve is kind of pushing back and having this idea of holding for longer. But this is seen as a bit dovish because we're steering away from the narrative of having to hike one more time and really just focusing on the idea of, yeah, we won't hike one additional time before the year ends. It's not that important, but it's really about how long we're going to hold rates at these sufficient levels. Now, I want us to pay attention to what's currently happening this week as we have a full calendar ahead of us. For example, today we did get some interesting data with the ISM manufacturing report coming out, which I did update the Push and Profit private group about that, but more importantly, what's coming out for the remainder of this week. Now, of course, at 8 a.m. tomorrow, we have Atlanta Fed President Bostic speak, but I don't put too much salt on what he says, and I actually put more weight on what Federal Governor Michael Barr recently said. And the reason being is because we have to pay attention to who has who has the voting right in the FOMC. For example, all these members over here, they actually have a say on the decision for monetary policy. As we see that Raphael Bostic, the Fed president of Atlanta, actually doesn't have a say until 2024. Remember, this area right over here, it rotates. And so right now, yeah, he could say some words that are going to be interesting to hear. And of course, you still want to listen to what he says, as he is someone who's part of the Federal Reserve. But, you know, currently he's not a voting member. And so that's why I put more weight on what we recently heard today. But of course, that's not the real data that we want to pay attention to going into this week. The real data is firstly going to be the job openings report. Now, this comes out tomorrow at 10 a.m., and I want you guys to pay attention to when this comes out, as recently we've been seeing that every time the job openings report comes out, it has a huge impact on the overall markets and also Tesla stock. Last time this came out, we actually saw Tesla stock push up pretty aggressively, and so this is something we want to pay attention to. Now, looking at the previous job opening reports numbers that we saw, again, we're going to get an update on this tomorrow, but previously we've been seeing the job openings declining each and every single month. And so if we see a continuation of this descending pattern with the job openings report, well, this could be seen as a bullish or optimistic sign for the markets. Now, this isn't because we want to see individuals in America not be able to apply for a new job. Of course, that's not the case. The idea is that the Federal Reserve has been keeping a tight eye on the labor markets, and we've been hearing them say that they want to pay attention to the JOLTS report, the job openings. They want to see this contract a bit further. And this is because we have to have an understanding of the Phillips curve, which is an economic model. And traditionally, what we see is that when unemployment is high, we typically see inflation low, and vice versa. When unemployment is low, well, we tend to see inflation high. And so, yeah, the Federal Reserve has a dual mandate. They want to restore price stability and have maximum employment, but sometimes you have to have unemployment trickle up a bit higher so that they could reach this equilibrium of having this balance where inflation is low, but also unemployment is also relatively low. And so that's why we want to pay attention to that data coming out tomorrow. But heading into the remainder of the week, we also have much more additional data that we want to pay attention to. For example, on Wednesday at 8:15 a.m., we have the ADP employment numbers coming out. And this is generally seen as a precursor to the public numbers that we come out, right? Because we know this comes from the private sector, and it's seen as a indication of what the government numbers are going to come out. Now, we've seen some deviations between what the government job numbers and the private sector numbers have looked like, but again, it's still something that we want to pay attention to. But of course, the real data that we're going to want to really continue looking into is the continuation of job data coming out on Friday with the U.S. employment report, unemployment rate, and also the U.S. hourly wages. And so definitely a very jam-packed week, and this is going to have a huge impact on the overall markets as well as Tesla stock. So definitely keep an eye out for these reports. But with that said, I want us to take a look at Tesla stock from a technical perspective. Now, we are at an interesting pivotal moment, and I want to go ahead and break down why I've highlighted this as a pivotal moment. So once again, we're at this price level where there's a lot of volume relative to price. This is what we see on the volume profile, and volume relative to price is completely different from your traditional volume relative to time. And what we see is that when there's a high amount of volume relative to price, there's a lot of exchanging between buying and selling at a particular level. And so what we saw last time that we were at this area was that there was a lot of consolidation. Tesla moved up, it went down, it went up, it went down, it moved up, it went down, until we had a catalyst break us above where there's less volume relative to price. Once again, we're at these levels, and so what we're going to want to pay attention to is seeing if Tesla gets rejected, because if we get rejected at these areas, well, then that puts us again at these low areas of volume relative to price. And if we see a continuation of selling pressure, well, that could be bad news for Tesla, especially if we get some bad data coming out in the fundamental side of Tesla with the actual earnings report that is expected to come out pretty soon. And so one of the things we have to understand is that if we do have actually positive data, for example, we do know that the Cybertruck deliveries are somewhere around the corner. We don't have an exact date, but Elon Musk has been teasing us, and we know that's around the corner. And so if we have any positive news, that could actually be enough to push us up right above this area where there's a lot of volume relative to price, and actually push us up back again where we could test this descending trend line, which has been a trend line that has been testing Tesla for a while now, where we've seen Tesla get rejected at that area for a while. And so if we actually see Tesla push upwards and have the opportunity to break this trend, well, that could put Tesla in a brand new trend where we're no longer on this descending trend, but actually in an uptrend. And so there's a lot of exciting catalysts going into 2024. I'm not saying the pain is just yet over. There's still some much more pain coming into the markets, but what I'm trying to say is that we're really at the end of the tunnel, and we're going to have some great opportunities as far as long-term investments in regards to Tesla. But of course, looking at Tesla from the short-term time frame, again, if we do see Tesla get rejected at this area, it'll be a sign for me to go ahead and short Tesla in my short-term trading account. This way I could hedge my long-term portfolio. So some individuals may buy puts as insurance, they may sell calls to collect premiums, or they may just short Tesla. Whatever way you go ahead and try to hedge your portfolio, by all means, you only do whatever you see value in. I'm not telling you guys to short Tesla or do anything with Tesla if it goes down. Of course, you have to do whatever you seem fits right with your current situation. So for my personal approach with Tesla, if we do see Tesla continue to sell off and we also get some bad data, well, that would be my sign to short Tesla. But I actually believe that right now we're more likely to see some relief in the markets, especially if we start to see the 10-year treasury start to kind of cool off a bit. That's something that I've been talking about on this channel for a while, where it's been pretty high and that's been bad for the markets. And so if the 10-year treasury starts to hit like a level or a ceiling and start to come down, well, that could be good, especially if we take a look at something right over here. We see that actually crude oil is starting to tick back down as well. And so that's something else that we want to pay attention to, because this has been contributing to headline inflation. And so this is actually good, because if we see headline inflation as well as core inflation trickle downwards, well, that's more data for the Fed to actually start looking into cutting sooner, which again would be very bullish for the overall markets. But I want you guys to let me know in the comment section below, what are your thoughts for Tesla going into the end of the year? And this could be, again, from a short-term perspective or a long-term investor, regardless. Just what are your thoughts for Tesla going into the end of the year? Do you think Tesla is going to start hitting closer towards that price target of $320 like Gary Black mentioned? Or do you think it's much more longer before we actually enter into that area? I'm interested to hear what you guys have to say. But again, there is a lot of good news, especially with Tesla really being positioned right here in a very sweet spot. For example, we're seeing that Ford is actually, we're seeing this struggle, right? We actually got some rumors that they're stifling production on their F-150 Lightning models, and this could be because of the continuation of the pressure from the UAW strike. And so this is actually positioning Tesla where they are still ahead of the lead, where these legacy automakers may have to actually cut down on their electric vehicles because they're not profitable, and they need to really double down on where they're losing money, or their profit makers are their internal combustion engines, but because of the strike, they may be losing money on their profitable sections, and so they may have to cut off the ties on their EV sector, and that's bad for those companies, but that is overall good for Tesla. But with that said, you guys let me know in the comment section below. If you're not subscribed to the channel, consider subscribing, and also watch this next video right over here where I break down why I don't trade or invest in penny stocks. Definitely a great video for a lot of individuals that I highly recommend.